everyone, and I'm a tutor with Chegg Tutors. The link to my profile is below. Today we're going to be talking about the trial balance. Now, in essence, what the trial balance is it's every single account that the company has listed all in one row. So we have balance sheet accounts along with income statement accounts, all combined into one statement. And the goal with the trial balance is to make sure all of our debits equal all of our credits. So usually what they'll do is they'll list the accounts in the order of assets, then liabilities, and then equity, and then revenue and expenses. So our income statement items will be down here at the bottom, and our equities right here, our liabilities right here, and these are our assets right here. So if we total our cash and our accounts receivable, our inventory and our equipment, along with the expenses on the income statement, those are debits, we will get $160,000. And to verify that our credits match, we'll have to sum our accounts payable, our notes payable, our common stock, and our revenue. And if we do that, we notice that we get $160,000. So we're in balance, meaning everything's good as far as the trial balance is concerned. Now, there's usually three or four steps. Once you have the trial balance, then you do adjusting entries, and that's just entries you forgot to make. We'll discuss that in a different video. After you do the adjusting entries, you make an adjusted trial balance, which basically looks exactly like this, except cash might be a little different, or accounts receivable might be a little higher, or notes payable might be a little lower. After you make the adjusted trial balance, you would do closing entries. Closing entries being moving revenue and expense to common stock, essentially. And after you do that, you would have a post-closing trial balance, which would be all of these accounts, and you wouldn't have the income statement accounts, but you would still you would essentially have all this and this moved into this. So our expenses would be $20,000 lower, our common stock would be $20,000 lower, and then revenue would be $40,000 lower, but common stock would be $40,000 higher. So our adjusted trial balance would be $140,000, or a post-closing trial balance would be $140,000 each. And that's all you have to do with the trial balance. You just have to list the accounts in order of assets, liabilities, equity, and then revenue and expenses, and then total them to make sure the debits equal the credits. And that's the basics of the trial balance. It's just part of the whole closing process. And if you have any questions, my profile link is below. Feel free to contact me. Hope you have a good day.